Meta reported second quarter results after the close on July 29th, with the call the same day. This episode covers the disclosed numbers and management's own words. Anything not from the company is labeled. Total revenue was $60.8 billion, up 28%. Family of apps contributed $60.4 billion, Reality Labs $431 million. Advertising was $59.4 billion, up 27%. Other revenue reached $1.0 billion, up 73%, the first time it hit $1 billion. Reality Labs was $431 million, up 16%. Daily active people averaged 3.6 billion in June, up 3%. Ad impressions rose 14%, and average price per ad 12%. Headcount ended at 75,472. Total costs and expenses were $42 billion, up 55%. Revenue up 28%. Expenses up 55%. That gap is the story here. Two one-off items sit inside it. 4 lines. Cost of revenue, $11.3 billion. R&D, $21.7 billion. Marketing and sales, $3.4 billion. General and administrative, $5.6 billion. R&D is the largest. 2 items were disclosed separately, a $2.4 billion legal accrual and $1.18 billion of severance, $3.58 billion combined. The company raised the low end of expense guidance because of the accrual. Operating income $18.8 billion, down 8%. Margin 31% against 43% a year ago. Net income $15.85 billion, down 14%. Diluted EPS $6.18, down 13%. Add both items back. Operating income $22.38 billion. Margin 36.8%. Taxed at the guided 15 to 17%. EPS is about 7.35, above the 7.17 consensus, calculated from disclosure, not reported. By segment, Family of Apps earned $23.4 billion. Reality Labs lost $4.6 billion, against just $431 million of revenue. Operating cash flow $31.9 billion, capital expenditure $31.1 billion. Free cash flow, $784 million. A year ago, it was $8.5 billion. Buybacks were 0, dividends $1.35 billion. Net debt raised $24.9 billion. Long-term debt now $83.7 billion. Cash and securities $90.3 billion. Revenue of $60.8 billion beat the $60.19 consensus. EPS of $6.18 missed $7.17. Consensus is a third-party compilation, not a company figure. Third quarter guidance is $61 to $64 billion, including about 1% of currency headwind. The CFO flagged macro uncertainty in international advertising. 3 revisions: expenses to $165 to $169 billion, the capex floor from $125 to $130 billion, and the tax rate to 15 to 17%. Full-year operating income still above 2025. For 2027 capital expenditure, the company gave no outlook, saying planning maximizes 2026 and 2027 capacity. Several legal matters are unresolved, including youth trials this year, with material losses possible. Zuckerberg named 3 areas: core business, personal agents, enterprise. In his words, AI is accelerating our core business today, powering our next generation of products, and opening the door to entirely new enterprise opportunities. He also said Meta is on track to deliver personal superintelligence to billions. The CFO's explanation: near-term capacity is extremely valuable because the industry has underbuilt historically for the wave of AI adoption. She expects compute to keep growing in 2028 and beyond. MuseSpark 1.1 shipped, strong at computer use and tool calling. Meta AI usage rose 60% after integration. LLMs now sit inside Instagram and Facebook ranking, and Reels sessions gained 15 basis points. Advertising launched the Generative Recommender. Facebook pilots show clicks up 8.3% and conversions up 15.7%. Over 1 million businesses use business agents weekly, now on Instagram too. Reality Labs revenue $431 million, up 16%, driven by AI glasses as Quest declined. The company also announced a venture with BlackRock, over $10 billion, for a data center campus in El Paso. The stock fell from about 585.60 to around 529 after hours, roughly 9.6%. Those are third-party quotes, not company disclosure. No ratings, no investment advice. Sources: Meta's Q2 2026 press release and call transcript. Consensus, after-hours quotes, and market cap are third-party. The X items basis is calculated from disclosure.